Thanks, Tim, for having me, and welcome everyone, and thank you for attending. I will start quickly, and I've actually got quite a short presentation. I've tried to keep it quite simple today. My major purpose is to try and give the listeners an understanding of what we do, why we do it, and what sort of return on shareholders' equity we get as a result of doing it. I might just move to the disclaimer. I might stay on the disclaimer, which is quite unusual in these types of presentations, because it's actually important in respect to what we do. This presentation clearly is of a general advice nature, but much of what Sequoia does is we're in the business of providing personal advice and advice to Australians, and Australians do not get enough advice. Only 10% of the Australian population is dealing with a financial advisor, and one of the major issues around that, one is cost. Some people don't see the value of seeking out a financial advisor, but more importantly, there is not enough financial advisors in the industry to support the needs of clients. Currently, there's only 16,000 financial planners in Australia, looking to serve a working population of about 16 million. So about 1,000 per advisor head, where an advisor's capacity is more like 150 clients that they can look after properly. So I thought I might just touch on that. And secondly, as Tim pointed out, I'd like to disclose that we own this business as a part of the offering we provide to the financial advice community. I'll move to the next slide. So as I touched on just before, I'm going to talk about the services that we offer, which are quite broad. So in reality, what we're looking to do is we've got three groups of clients that we look to serve. That is financial planners, that is accountants, and that is the trustees of self-managed super funds. So very large markets. And then what we've looked to do is to try and look at what the type of services that community needs. I will then touch on who is our client, and our financials, where we're looking to head, and at the end, hopefully, most of the presentation, I'm quite happy to finish early because I see questions as the most important aspect of these types of presentations, and we're very open to questions, and hopefully we get a few. We'll move to what the services we offer are. Primarily, we provide services across 4 divisions: licensee service, professional services, equity markets, and direct investment. And we provide those services to those 3 groups of people that I'm talking about. So a financial planner, an accountant, and a self-managed superannuation trustee needs a whole range of services to get advice and try and improve their financial situation in a market that's confusing. As the 200 odd listeners would be today, I assume that you're listening today because you'd like to know more about your own personal financial affairs. And you seek a professional in some capacity to give you solutions and advice and interpretation of those financial affairs, so you can make some sound decisions in respect to that. Our role and the services that we provide is to try and educate and provide those financial planners, accountants, and self-managed super funds trustees those solutions. The licensee services, and much is talked about this area of our business. Some people think it's all we do. It is far from all we do. So we provide the license. And a number of people talk about the number of advisors in the industry and how many advisors do you license. That is one of the businesses that we provide. So we provide license for about 300 odd financial planners under our license, but we touch around 1,500 advisors of the 16,000 out in the industry in some capacity, and that's whether they use one of our other services or we provide back office services to third-party licenses. We also provide general insurance broking services. So a financial planner, an accountant, and a super trustee has general insurance broking needs. So we provide a solution to them. We're a member of the Steadfast Group in respect to that, which is one of the biggest buying power groups in the country alongside Austbrokers. So it gives us really strong buying power, and our end client, as a result of having a relationship with a financial planner, accountant, or a trustee that we provide a service to, gets real value because of that relationship. We also have a corporate function where we do IPOs and capital raisings. A few reasons for that, but again, the major reason is our end client being that accountant, financial planner, or trustee. They're looking for opportunities that are not necessarily available to the general public, and they're looking to find advantage as a result of the personal relationship they have with our accountant. And that's the reason why we have a strong corporate department. The next area is professional services, and it's one of the fastest growing parts of our business. So the accountant, the financial planner, obviously look to provide the right corporate structure for their end client, and we provide the legal documentation to do that. So when you go and see an accountant, and the accountant or the financial planner in some cases sets up a company, trust or super fund, they use a business like one of the ones Sequoia owns. We touch around 2,000 accountancy practices in this area of our business, and we're setting up around 200 structures per day. That's a business that's increasing at a rate of about 20% per annum, and more accountants are coming to us because we've invested heavily in the technology side to make it really, really easy for an accountant or someone at an accountant's office to go and set up a company trust or a super fund and get the right type of trust and get the right type of super fund wording that's always up to date and allows their clients to feel safe and have the right structure for when they're making investments. Equity markets is the business that many people would know as Morrison's. That's a business within Sequoia. We're the number one options trader in the market. In respect to equity trading, we're seeing growth of around 30% per annum. We're winning business from our competitors, and we're doing about $2 billion of trades per month in that particular business. We got to a break-even point in the Morrison's clearing business about 12 to 18 months ago. And it really is a toll road type business. So once you get to the critical level, in our case was about 16,000 contract notes per month was break even. We're now up around 50,000 contract notes per month. So that business is growing quickly, and we think our offer to the accountant, the financial planner, and the self-directed investor who does lots of trading and wants high service is the number one in the market. We also have a specialist investment business. So from time to time, clients want to access bespoke type investments. We deal with the leading banks around the world. We come up with a thematic or an idea where a wholesale investor or a financial planner comes to us and said, look, I've got clients who have a need to try and find income, or I have clients who want to invest in a thematic such as electric vehicles or something like that. We create a structure and offer an investment out through our network. And finally, the direct investment business is the business that you're listening to now. That's businesses like Financial News Network, Share Cafe. And the point of that business is really important, is because it's really an education point for financial planners, accountants, and the self-managed super fund trustees. It's also a research business, so we're really strong on providing research on hopefully every fund in the market through our Informed Investor website, which is www.informedinvestor.com.au. We're basically looking to interview all of the fund managers in the marketplace and provide information on all the funds, so a financial planner, accountant, and the end client can have independent information to make a choice about who they're investing their money with. I'll move to the next slide, Tim. So the businesses are wide. So those four offerings, we have 20 businesses, all of them small, but all of them interacting with each other to provide that one common service, is to serve those three communities. Each one of them in their own right is profitable, and all are now beginning to talk to each other to provide cross-market opportunities to each other. On a sum of parts basis, I think the valuation of Sequoia is significantly undervalued. If you looked at those pieces, and hopefully no one does from a private equity point of view, but if they were to look at the sum of parts valuation, this business is clearly heavily undervalued. Move forward. As I touched on, a fraction. So what we think about as a board and with the management team is who is our end client, and how could we serve those in a manner to make their business better. And if we do that, we will generate a reasonable return on profit. So the headwind for everybody in our industry is the number of advisors serving the community. So the number of financial planners out there has reduced dramatically. A 40% reduction in advisor numbers since 2019. Looking to serve a community that has more need for advice now than it had in 2019. So the account balances of people in superannuation are growing. The population is ageing and living longer, so they're having to work out what to do with their money. Inflation fears, global fears, all those sorts of things are creating tailwinds for advisors, clients knocking on the door wanting advice, but the challenge is there are not enough advisors to serve that. So there's currently 15,800 advisors and 1,100 licenses at December 2022. We license 2% of that market and touch about 10% of that market in one of the services that we provide. One of the things we haven't talked about, and maybe I should talk about it, because people focus on how many advisors have you got and how you're going in that growth phase. Sequoia is the only license in the top 10 license which is led by AMP and Signia at the top. So the only license in the top 10 since January 22 that has not had a decline in the advisor numbers. So most of those other groups have had declines of 40 or 50. Sequoia is actually net positive since January 22, despite the number of actual advisors available to be licensed dropping dramatically. On the accountancy side, we're winning market share. There's 20,000 accountancy firms in Australia with about 200,000 accountants employed across Australia. We're touching more than 3,000 accountancy firms. So the opportunity to provide our service across that market is very broad, and they're the sort of things we'll do. There's 650,000 SMSFs in Australia, with 27% of the superannuation invested in the market. So a huge market and very, very important to us. I'll move to the next slide before I run out of time. Financial performance is obviously important. We have, 22 was a good year for us. We generated $14.7 million of operating cash flow before tax. We paid out 1.4 cents in dividend on a 4.2 cent dividend net profit after tax. So we're keeping 60% of the operating cash flow for growth, and growth is where we're heading. Move to the next one. The key, I might move past this so I get to questions. I said most important. Where we're looking to focus on the near-term future is organic growth is extremely important, but growth by acquisition is somewhat important. So licensee services and professional services, we're definitely out there looking for acquisition opportunities. In the professional services area, we're looking to buy businesses on 3 to 4 times earnings and just bolt them in. On the licensee services area of the business, that's much more difficult. You've got listed companies like Count, Diverger, Centrepoint Alliance trading at sort of 9 to 10 times earnings. We're not prepared to pay that type of price, but we may use our cash to acquire other businesses. The capital management strategy, we're happy to do buyback. We do want to increase our dividends over time. We have a $13 million franking credit balance, so we can pay dividends for fully franked dividends for quite some time, even if we weren't to make any future profit, but we obviously expect to. Next slide. The number of shares that we have on issue is 133,620,000. That was a week ago. It's actually down to 132 million now after continued buyback. At 54 cents, our market cap is $72 million. We have $12 million of cash, more than $12 million of cash on our balance sheet with no debt whatsoever. So we've got an enterprise value of $60 million and an EBITDA of 12 million. So the business is basically trading on 5 times cash. We want to build up the cash. We're aware that the sum of parts of our business is significantly higher than the current trading value. So we're open to potentially selling some parts of our business if we can get a more realistic valuation, and then potentially increase our dividend payout ratio. We're going to increase it this year from 33% of net profit after tax to 40%, and then to 50%. But we're fully aware that we should be using our franking credits in the near term, just in case the government changes. I'll finish there and I'll open up to Tim for some questions.
Thanks, Garry. Does look cheap on a sum of the parts perspective. And there's a question here, what's your takeover defence? What's the strategy there?
One of the takeover defences is the top 20 shareholders own 59% of the company. The management of the company owns 30%. So my past business, Interprac, for example, the shareholders that came into that business still own 35% of the company, and they've been there for 3 or 4 years. So 60-odd% of the company shareholders are there for the absolute long term and believe in the long-term vision of the company. So for someone to go and try and attack us, they would have to pay a very, very significant premium for us to move away from the vision that we see. We're all thinking long term. That's why we're low payout ratio, use cash to make further acquisitions and grow this business in the same way that some of the major companies in Australia built their financial services models, generate cash to buy more businesses at lower multiples than these trade at. So we don't think we're vulnerable, even though the share price is currently, in our opinion, undervalued.
And Garry, there's a number of questions here. We've run out of time, but one more big question. And as I said, if you don't mind answering some of those questions online in regards to the buyback and things like that. Now, the financial advice business has been a tough one. Increased regulation, compliance, remediation costs. Why should an investor invest in a financial advice-based business?
I think an investor is a good person to have a think about it, because an investor actually understands the challenges of making decisions on which company to invest in. And they, if you have issues, for example, in a legal matter, you go to a lawyer. If you have, you want an opinion from an expert that you can trust, you're likely to go to a financial planner, an accountant, a stockbroker, etc. And there's just not enough of them. So the demand, people always talk about demand and supply. The supply of financial advisors offering this type of services is low. The demand is absolutely ever increasing, and Sequoia is in the business of attracting, more and more of the parties who can give that type of service. So there's absolutely no reason why Sequoia, at some stage in its future, can't provide a service to 100% of the financial advice community in some capacity, whether it's just being, using, the media side, or whether it's using our broking side, or whether it's actually us being licensed. And there's absolutely no reason why we can't touch every one of those. And the buy demand side supply is absolutely in our favour.
Great, Garry. That's all we have time for. I'm sure we'll speak before the end of the day. Talk to you later.
Thank you, Tim.